What's better than earning money from a 9-to-5 job? It's earning money while you sleep, which is made possible if you start investing. You're listening to the Real Estate Investing Demystified with your very own dynamic duo, Ava Benesocky and August Biniaz. Tune in as we discuss everything real estate, both on the passive and active sides. We feature life-changing stories of today's real estate leaders that will help build your own roadmap to success. This is a show that will lead you to a diversified portfolio, a much bigger revenue, and a next-level venture that brings you a smooth cash flow. Let's get this episode started. Hello, everybody. We're back. Today, we are joined by a guest who's actually just right across the border from us, August.
Great. I was watching if you were going to just give up the guest's name right off the bat. I was watching that, but no, it's great. No, yeah, we're excited with our guest. Not only the fact that he is right across the border is because he's got a lot of energy. He's got a lot of knowledge. His background in business goes so far, and it's very interesting because he has a background in marketing. And in my opinion, marketing is the foundations of building any great business, particularly real estate private equity, because if people don't know you, they're not going to invest with you. They're not going to partner with you. So it's important to get that know factor checked off. So we're excited to having our guest on the show.
And that makes you think of something from the past. When we first co-founded CPI Capital, August had this marketing, like his brain just came alive, and he had all these really cool marketing ideas, and
yes,
it definitely helped us grow our company. So we're excited to dive into to Chris's
zero marketing background. Never even took a weekend course about marketing, but marketing is really getting yourself seen, right? So if you're good at that, if you're a rooster like I am, you'll flap your wings and everybody's going to get to notice you. So
that's right. That's
yeah,
right.
Let's
introduce our friend that's right across the border in Seattle. We're in Vancouver. So today we're joined by Chris Roberts, everyone. He is the founder and CEO of Sterling Rhino Capital. Now, Chris is an entrepreneur. He's an author, a speaker, a podcast host, and a real estate investor. He owns and operates multiple businesses and is an enterprise partner with Feeding America. So I'm looking forward to learning more about Feeding America.
Yes,
so
absolutely.
We'll dive into that.
An interesting thing about his company is my home development company, the custom building home company, was White Rhino Development. So there's a connection, and I love to learn about Feed America because I thought America was taking planes and feeding the world. What happened? Do you have to feed America? It's the richest country in the world. What's going on over here?
Yeah, let's talk about it. But let's talk about that. Before that, everyone, we believe this interview with Chris is going to bring great value to real estate investors looking to learn how to passively invest in real estate. What a lot of people actually don't even realize, hey, I can passively invest in real estate. Most people think you have to be an active investor. So let's dive into things. Welcome, Chris. Thank you for being on our show today.
Thanks, Evan, August. Appreciate you guys having me. I'm grateful to have the opportunity and just really looking forward to jamming back and forth with you guys. You're amazing. You add a ton of value to your audience and many others out there as we followed you along your journey. And just looking forward to seeing what kind of questions you guys are going to ask me today. So let's do it.
Let's do it. Let's have some fun, Chris. Let's start off just so everybody can get to know you. Please tell us about your background and then your start in real estate, please.
Yeah, absolutely. My background, I was on my own at a very young age. So I had that entrepreneurial kind of bug, right? I kind of had to figure things out. And I had a mentor at a young age as well, around the age of 18. I'd been on my own for several years at that point, and he kind of put me on the right path. He gave me books to read. He taught me about how to build a strong work ethic, about mindset and problem solving. And he put me on a journey to building a sales career, which I would have never thought I would be good at. And it was his guidance that kind of set me on the path to build some financial stability in my life. And so I built a sales career, if you will, and then eventually turned that into an entrepreneurial journey where I started my own company and became kind of a sales and marketing guy, if you will. We grew up to about a $30 million company. And then I dabbled in single family real estate, land and things of that sort. And obviously found my way into multifamily and now development. So my journey started at a very young age. And I had an opportunity to experience through just troubleshooting, problem solving, hard knocks, and just crazy work ethic, some achieving some success eventually through that journey. So I'm grateful to be here, and I've got an awful lot of stories along the way, but that's the short story.
Awesome. Let's focus on that transition between single family and multifamily. And for the viewers and listeners who might not be familiar with the difference between multifamily and single family, is that single family is really assessed and looked at by the comparable approach, right? What's your neighbor is selling, your house is probably going to sell for around the same price. Whereas multifamily is by the income approach, the cap rate approach, as is known in the commercial real estate space. Talk to us about when did you realize there was even an opportunity to get involved in multifamily, and then what were the first steps? Like, what did you start investing as a passive investor? Did somebody pitch you a deal? Was it just you wanted to scale? Talk to us about that initial first steps and your initial part of your journey.
Yeah, absolutely. Great question. And thank you for asking. I think the travesty in this world that we're all in, is there's no access to it. Like, you're not taught it in school. A lot of people aren't involved in it. Your bookkeepers and CPAs don't really talk about real estate a lot. So after being in the stock market for years, I had a great conversation with a friend who had rentals. He got me into single family fix and flips, and I started learning on YouTube, swinging hammers, just the whole story, right? You've heard it before, but it worked. And I just realized there's no way for me to really create a lot of wealth here or financial freedom. I need to scale. I need to grow. How do I do it? And just with limited capital, I realized the best way to do it, after researching and learning online, podcasts and things of that sort, that multifamily was a good vehicle for that, and that you could use other people's money alongside your money to grow faster and create wealth. And then at the same time, doing something that I really love, which is my passion, is teaching others, just helping, like, educating, sharing my journey and my experience. And so I got the best of both worlds with that. And so I transitioned from single family to multifamily for several reasons. One was I couldn't scale and really develop wealth. I had a dozen or so single family rentals. I was making cash flow and a little equity, but the fix and flips and the capital gains and all of that, it just became a challenge to manage. Whereas I then went and bought my first 100 unit multifamily complex, which was my first one. And we made, 10 times the money. It was way less work when you spread it across the team. This was a challenging deal, but it was way less work collectively. And we found that from that moment, we were in, and we caught fire. We built out our systems, and we started growing exponentially.
Awesome.
So that was the transition.
Great. But allow me just to ask a follow-up question, Ava. So a lot of time, believe me, I've been in real estate for 17 years. When I realized, real estate private equity or the syndication model, I invested a lot of time and resources to learn about the industry, to learn about the business. And a lot of that information, the content, came from listening to podcasts and watching YouTube videos and what have you. But a lot of times, as I was watching those stories and hearing people's journey, a lot of times very important milestones were just breezed over. So that's why I want to break this down. When somebody's listening to this, an audience who, a busy professional who owns a couple of homes here in Vancouver, the median income is $90,000. The median home price is $1.2 million. Most people, it's very difficult to buy their primary residence, let alone invest in real estate. But when they hear you're saying my first apartment that I bought was a 100-unit apartment, it's mind-blowing to others. Let's break that down. You're in single family, you have a job, you have a business, you're investing in single family, you want to scale that. What are the first steps? Did you go get a mentor? Did you get a coach? How did you connect with these other individuals to partner to buy a 100-unit? Was it a syndication? Were you passive? Were you active? Break it down to us. Give us the blueprint on how is this even possible.
And did you have a hell of a time putting it all together, right? Because it sounds,
Yes,
it's a lot of people think it easy, but did you have a hell of a time putting everything together?
Well, thank you both for your questions. I'm going to answer them in the best I can. And so it actually goes back before that, but I'm going to keep this very simple. And by the way, we're writing a book about that first deal, which you're going to love when it comes out in the first quarter, because there was a lot of trials and tribulations and challenges. But it starts with something far deeper. For me, I had an inspiration early on because I grew up with nothing. I was on my own at a young age. So there was a fire in me that caused me to work far more hours than most people would. Probably not because I had to, but because I sort of felt like I had to, right? Always kind of worked as though someone was going to take my stuff. I just put the extra hours in. And that set me on a path for success, because when I made the transition, I looked at 100 units as though it was just another transaction. I was not intimidated by the door count, right? We don't even count doors today, my team. We count wealth, the wealth we generate for investors and ourselves. So I looked at it and said, okay, let's break this down like any other business model, which I had done before because I had started businesses. What kind of team members do I need? What kind of research do I need to do? What kind of marketing do I need to do, et cetera? Do I need a mentor? Yeah. So I hired a mentor. Ironically, I found that first deal without my mentor. I actually found it within 2 weeks of signing up for a mentor program. And my mentor called me and said, I heard you got a deal. Why didn't you tell me? So it's pretty funny, right? It was my work ethic. It was my activity in the forums. It was my ability to just jump on a plane a week after I got contact from someone in a forum and fly across the country and start taking massive action. So that's really where it started, was me saying, I'm not going to sit on TV on the weekends. I'm not going to go to games with my buddies. I'm not going to buy boats. I'm going to work 7 days a week, 16 hours a day until I achieve my dream. And that's how it all started. And then, of course, there's the fundamentals of now, how do you execute, right? Which is obviously a deeper answer. Does that answer it?
That was a lot of hoorah and a lot of a lot of energy there. We want to know exactly. You're going from single family to multifamily. It's 100 unit. You have the drive, you have the passion, you have the energy, all the power to you. But you must have been part of some kind of an organization for that deal to even come in. You must have even been told.
Yeah, how did you find the deal? Let's hear.
Yeah, here's the breakdown. So it started similar to what I just said, which was I got very active in forums. Somebody reached out asking for help in a Slack channel amongst one of these forums that I had signed up for, right? No different than any of the other meetups you guys are in or the groups or whatnot on Facebook. I said to him, what kind of help do you need? And he listed these things that he needed. He said he had a deal under contract. 2 weeks later, I flew across the country and I was part of his team. Ironically, his team started to fall apart, right? But because I was so active, I had the opportunity to take over that contract. So I happened to have the capital to take over that contract. We rewrote the contract. We negotiated. I brought other team members on out of similar forums that I'd come across, including a mentor student that was in the same program I was, right? And we all tackled that deal together after 11 months of negotiating, right? So the process was being active in the forums. Yeah, I had a mentor to give us some guidance, right? And if I can say his name, is that okay? The group?
Absolutely, love to.
Okay.
Absolutely.
Yeah, so it was Michael Blanc's mentor program, right? And within that culture or circle of influence, I've talked about it before, I found others that were like-minded that could help, along with, say, capital raising or asset management or underwriting. And then we had a sponsor. So we had a sponsor outside the group that came across that was willing to sign as a key principle, right? Liquidity, net worth, experience. And he helped us to get Freddie Mac debt on that very first deal. So that's kind of the process of how it worked. Wasn't me on my own. It was a group of people. I was kind of the lead on putting it all together. And we just stayed very active and we followed the processes and nailed it. It was great.
Chris, that what you just did right now was gold. What you did literally was gold, because so many times I've watched videos and listened to podcasts and I wish the interviewer would ask the question I asked you and realize, because that was gold, because it's not just the enthusiasm to be involved, it's actually taking action. And that taking action is having the guts to say, hey, what do you need? You have a deal. What do you need to close this deal? How can I add value? And then taking a flight and going on learning on the job, I'm sure. What date was that approximately? What year was that?
That was, well, the mentor program I signed up in mid 2019. We got that deal within 2 weeks of signing up. Again, it wasn't the mentor program, although I did jump on deals through the mentor program as well. It worked out great. So it was well worth the money. And then it took us 11 months to close that. And then we sold that January of this year, that particular property. So 3 years plus ago, we started that process.
Amazing.
And I wanted to take a step back, and thank you for sharing that, Chris. You talked to a friend, and that's kind of how it was, just that talk with the friend that really started this journey in multifamily. And that's precisely why we like to put a lot of content out there, because it's just that one time or that one investor that talks to their friends, and it really can change people's lives around. So I just wanted to.
No, for sure. For me, my start in the business, honestly, was I heard the word syndication.
That's
and
right.
I'd never heard that word before.
Yeah, that's right.
And I Googled it and I went on YouTube and I watched a video of Dan Hanford explaining what syndication is. I eventually got in contact with Dan. We did our first deal with Dan. We did another deal with Dan.
Yeah.
We became good friends with him. But it's just searching that one word, syndication. What is this word? What does it mean? How can I be involved? How I can raise money for my deals?
August got all excited about this syndication. I was walking by his office, and then I did a hostile takeover.
I love it. Hey, if I may, just along the lines of what you guys put into your business and creating your craft and your skills, you're very good, very professional, and you do a wonderful job. But when people see you, they don't realize how much ground and pound goes on behind the scenes. And I think that's really important, because it's not just energy with me. I have a lot of energy, enthusiasm, I'm great, gratitude and all that. But it's the work ethic and the execution, and then surrounding yourself with people, right, that can help. It's that deal was a lot of work. I had approximately 800 hours of my own time in it before we closed. But that deal yielded incredible returns. I mean, I would never trade it for anything in the world. So all your listeners really need to understand, like, it's not one thing just to hire a mentor or read a book or listen to you really have to be prepared to sacrifice a significant amount of time in your life to build your craft. But it will net you incredible returns at some point. You may not get it today, but it will come. And I think that's really important. You got to sacrifice now to have later.
I love that you touched on that, Chris, because we always say, if this was easy, everybody would be doing this. And it's definitely not. And you do have to sacrifice. We've sacrificed starting our family in order to build our company. So we thank you for touching on that.
Sure.
Okay, yeah. So I just wanted to, this question I was leaving it for you here.
Yeah,
I didn't want to take it over,
Let's
like
do
a
it.
hostile takeover of the question. No, it was just about the transition. So Chris talks about he's involved in his business, he's involved in his profession, it's, investing in single family, sees multifamily, jumps right in it, gets a 100-door project on their contract. He's part of a mentorship. He's building his team. But now, when does he make the transition from having a job to being a real estate investor? And is there any anxiety involved? What is he going to say to his family? What is he going to say to his friends? What is he going to say to his mom? Difficulty I had. Hey, I'm not going to be building houses anymore. I'm going to go to the US and syndicate deals. What? You're going to leave your career, your business that you worked so hard in building? I'm like, yes, Mom, I am. How much are you going to be making? Oh, I'll make most of the money when the property is sold 5 to 7 years down the road. What? Yeah. So talk to us about that journey, man.
Yeah, and how was the transition for you?
Yeah, great question again. Thank you for that. I'm going to talk about my partner briefly, because he's probably a better story than I am, because I've been an entrepreneur for quite some time, so I'm familiar with the chaos and uncertainty of being a business owner. So that didn't scare me, right? Tackling 100 doors, yeah, it was a little intimidating, but I knew it was just modeling. It was numbers. It was performance and execution. So when I started the company, I was already working maddening hours. And then I just increased those hours and slept less, literally 7 days a week. Today, I work 7 days a week, not because I have to. I'm financially free today. I don't have to work if I don't want to, but I love the business. I love the space. I love this, right? My partner, on the other hand, COO, he was a construction engineer. And when he came on board with me a few months after I started the company, I said to him, you and I have complementary skills. Why don't you just jump on with me and I'll split the company with you instead of us. And we were in the same mentor program, which worked out great. I said, instead of us spinning our wheels, why don't we do it together? So he left a very lucrative company that he had helped build over 20 years. And that was scary for him. But he said to me, once I partnered with you, I knew we were going to be successful and I was ready. So he literally, as Michael calls it, burned the boats and jumped on. I was already an independent contractor. I was working extra hours, right? And then we did it together. It is scary. I mean, I talked with him and many others about that leap. And I think what's really important is if you have a few good team members on board, it's easier to make that transition because you have someone to share the ups and downs with. If you're on your own, trying to do it on your own because you want acquisition fees or because you want to get rich quick, that's a mistake, in my opinion. I think you need to find people around you that complement your skills, your strengths and weaknesses, and then you're going to build confidence. You're going to get a deal or two. And then when the time is right, you can exit. You have to obviously talk yourself through it, but I think the team is what helped all of us, not me as an individual being a leader. I couldn't do this without my team. They're amazing and they've helped us scale exponentially. Awesome. So I hope that answers it.
Sure. Yeah, absolutely. Yes. So okay, great. Let's talk about another very important part of this business, which is, aside from finding deals, surrounding yourself by the right people, being energetic, getting a lot of knowledge, is also you're going to need equity. You're going to need capital. Talk to us about your experience early on, particularly on the 100 doors, and then now the deals you're doing. Prior to the show, you were talking about very large deals. So what was the process there? Did the mentorship program assist you with that? Did your marketing background assist you with that? And we'll get into that part of it. But I want you to, early on, when you realize if you want to be successful in this business, you're going to need to have access to capital. You're going to need to have access to equity. What were the first steps you took? And remember, Chris, I'll come back and dig. You be precise.
I love it. I love it. Okay, so here's the deal. First, I want to start off with the wrong mindset I had, which was, okay, we need $2 million. I can do that. I can raise $2 million. Huge mistake for someone coming to this business. Even if they're a sales and marketing guy, an expert, a talker, it is difficult to raise capital. So I encourage anyone that's thinking about it to take it very seriously and understand that there's no quick way to raise capital, especially when you start. The best way is through your relationships with existing people and their circles of influence, their friends and family, and your credibility over time, because that's how you're going to raise a lot of money, is them sharing with their friends and family, hey, I'm invested with these guys, I like them, blah, blah, blah. Now, of course, you can do marketing, which we'll get into, I'm sure. But for me, the mistake I made was thinking I could raise millions and millions of dollars. And on my first raise, I raised like $325,000, which kind of shocked me. Right now, we all got the raise done and it was great. The second deal, I raised 1.2 million, which was exponentially higher than the first raise. And then after that, it was millions and millions.
How long was 1 to 2?
It was like 6 months later, maybe, by the time we actually got under contract and were ready to raise. So it was maybe 6 months.
What do you think you changed in that 6 months that allowed you to go from 325 to 1.2? What was it? What would you equate that to? What would you what is it called? What would you say was the reason?
Yeah, two things. One, the first deal I had did not close by the time the second deal I had got under contract and actually closed. So the first deal took so long that we had another deal come in. That's the one I actually raised 325 on. So I had been working this deal and learning, right? Developing skills on my presentation and building credibility. And so now I have this deal under my belt. So by the time I got to the second one 6 months later, it was, hey, we have this deal. Here's what we're doing here. Here's the construction process, et cetera. Here's my team, blah, blah, blah. And then we had a network now because we had raised, we had credibility. And then I was able to kind of hone in my skills on my presentations, and all of that together, along with a little bit of activity by way of marketing, allowed us to grow faster. Plus, almost all, I think I had 5 or 6 investors, I think 5 of the 6 invested in my second deal, right? And then those people that invested in my second deal, I simply asked around closing time, would you be willing to put more money in? And about 80% of them said yes, right? So these were things that I worked along the way that worked out really well. I just was active, right? I wasn't afraid to ask the questions. That's part of what helped me. And then probably a little bit of luck. I mean, I'm not going to lie. You know, sometimes it's just timing. It's luck. It's a referral from somebody, right?
Got it. Got it. Would you say mentorship is helpful when it comes to capital raising?
I think it's really important if you have the right relationship, the right connection, because not all mentors, sometimes you go into a blanket scenario where there's one mentor and there's 500 people. Well, they're not all going to be the right fit. Not everybody's going to resonate the right way. They're not going to pick up the right skills. The one-on-one stuff is really good in my opinion. And I think having a mentor as far as capital raising is good for the fundamentals, but there's no substitute for you getting on the phone and calling people and following through and presenting on YouTube and telling the world what you do, not what someone told you to write down or read some script. In my opinion, that's the most powerful thing. You're the one they know, like, and trust, right?
Got it. So let's talk about
you have to add a special touch so that they
absolutely. So let's talk about capital raising fundamentals. And I want to, people who've watched so far or listened so far, I want to give you a blueprint on how to raise capital. Okay, so it's really the triad of know, like, and trust. So people have to first know you even exist to then want to invest, to then want to like you and find you interesting, to then trust you enough to give you their money. So let's focusing on that know part of the equation, and marketing is such an important part of that. So let's decipher this a bit more. Let's kind of go through this a bit longer. And like I promised, I was going to give you the blueprint. The blueprint is really creating content as an investment firm. You create content. If it's for example, our YouTube show podcast, we're creating a lot of content is out there. People see it. They come into our funnel. We use bits and pieces of the same recording to have it on our social media platforms. Again, using that as a funnel to come in. We speak on other people's podcasts and YouTube shows. We speak on stage. We rent booths at conferences and events. Ava has authored a book. I write newsletters. So there's a lot of work that we do out there, a lot of content we create that somebody out there, depending on their demographic, depending on their background, depending where they're at, they see this content and they end up coming through this journey, the investor journey, into our funnel. And then at some point they will be nurtured in our CRM So because we're syndicators, we syndicate deals. A lot of times most people in this business, they don't manage a fund where they can continuously raise capital and continuously allocate that capital and buy assets. We do deals, and even the biggest firms, they have deals throughout the year. So you might not have a live deal at some point. So it's important to nurture your audience. So talking about this blueprint that I just provided, this idea of creating content and being noticed and getting people to come through your funnel through digital marketing avenues and CRMs and landing pages and what have you. Did you realize that early on that this is a very important part of the business, that you need to leverage your background of marketing and building businesses to then come into your business as an investment firm, to utilize those, and which one of these items that I just mentioned are you utilizing? I believe you do have your own podcast and YouTube show as well. Talk to us about that. Love to learn more.
Yeah, absolutely. I think, first of all, it's a journey that never ends. We're always evolving and we're getting better and we're tweaking things. And I think that's where people make a mistake. They think I can hire somebody, or I can buy a program and put a bunch of content out and I'm just going to raise millions of dollars. And people say that, raise $50 million in a week. I mean, okay, we're very good at what we do, and raising money's hard. I mean, I'll tell you, we've raised a lot of money, but it's not easy. And so I think the important thing is figuring out, what is it that you're telling your audience? Because everyone is going to open up Facebook and see, oh, XYZ return, syndication, jump in. There's a million ads out there, right? Or a podcast. What is your unique niche that resonates with people? I mean, whatever that is, you guys talking about yourselves, your personal life, why you got into space, whatever. For us, it's health, wealth, and mind. So at the createyourfortunepodcast.com, our podcast, we talk about health, wealth, and mind. We don't just talk about returns. Those are boring. Even wealthy people, they see the numbers. You don't need to go on and on about underwriting, right? But what they want to know is, well, who are you? What do you do in your personal life? How can I trust you, etc. So you have to mix it up, right? You don't just tranche on about numbers. You have to be somewhat personal, in my opinion. And you do have to have multiple streams of marketing, right? Whether it be maybe Facebook's your thing, YouTube's your thing, podcast. We found the podcast works really well for us. I've done the podcast where I interview people. I had another podcast where I interviewed. I found there was another one where we just generate a lot of really good content people resonate with. And that seems to work better for us than the structure of
like
where
what?
I was just interviewing.
What do people resonate with? Talk to us about that.
They resonate with us specifically answering questions on our podcast of things they're concerned about: family life, wealth, mindset. How do you calm down? How do you leave your career? What is real estate investing like on a very simple level? Not ROI and cap rates and IRR and all this stuff. It's, oh yeah, we get a bunch of people together and we buy complexes, and it's pretty cool. And this kind of language, right? And you find that people resonate. And we might interview an investor and they tell their real story. We don't coach them. They just explain why they left being a massage therapist to go become a passive investor, etc. So what I'm saying is, in all the content, I think it's critically important to have a thought leadership of some sort platform, but it's very important that you figure out what you're good at delivering on those platforms, and how you're speaking directly to the people you want to bring into your world, and not trying to be everything to everybody, because everybody's doing that. Everyone is sending the same type of information out. The amount of newsletters I get is ridiculous, and they're almost the same thing, right? You just put a different logo on it.
But that right there is some gold, because you're a student of the game. You're subscribing to all these newsletters to learn, educate yourself, and possibly emulate some of them. So that in itself is a way to gain knowledge, is by subscribing to as many newsletters as you can if you're trying to really start in this business and grow in this business.
100%. Yeah, there's nothing wrong with that, right? I mean, you have to learn. And so what I'm saying is, I don't have the answers. I can tell you, though, that we have found going to the investors that we want and trying to speak their language on the other side of the numbers has worked very well for us. And it's very natural, and it feels good, and it's fun. It's inviting. It's not staunchy and boring and boraxy, right? There's a mix in there for everybody, but you've got to find that journey on your own, right? You've got to trial and error. You've got to work through it. Now, don't get me wrong. We do Facebook ads, and we've done some paid stuff, and a lot of podcast interviews and things like that. But I have found that through the organic approach and speaking directly to the investors, and then them telling everyone how much they like us because they relate to us and we relate to them, has paid massive dividends versus I'm just throwing newsletters out because, guys, you know this, a third of people open your newsletters and then they forget, like, or they don't open them again, so how are you getting to them? And if they do see another piece of content, is it the same thing you sent them in the email? Hey, we've got 17% returns, et cetera. Or is it, hey, are you stressed out about the economy? We just did an amazing podcast where we deep dive and make it simple for everybody. You don't need to stress. Tune into this podcast. I mean, right? That's, okay, wait a minute. Yeah, I want to know that. Like, because CNN's got us freaking out online, right? Like, you need someone to calm you down, not get you to freak out.
Got it. Now, maybe you can put us at ease because, again, being a newer company and having a lot of different marketing and other initiatives to create leads and connect with investors, there's been strategies that we put into place that were totally fruitless. Have you experienced such a thing as well, particularly coming from a marketing background? Did you use a certain strategy which didn't bear any fruits, or wasn't really, didn't pan out?
Yeah, absolutely. I found the ones that, let me tell you the ones that work, because there's many that don't. I have found that social media works when you're on multiple platforms, right? So if you're on Instagram and Facebook and YouTube, you're catching men, women, and maybe teens or whatever it is, right? And you're creating the same type of messaging so that you're hitting them in one way, shape, or form, right? In other words, you're not creating special content for Instagram. You're kind of putting your message out. Hey, we're talking about the economy today, tune in, or whatever it is, right? I found that works really well because I'll find people will come in a year later and say, Chris, I saw what you did on Facebook. I want to invest in that thing. And I'm like, man, I've known you for 15 years and I've been posting for like 5 years now. And that's the first time something resonated with you, but it was Facebook that got them, right? Or Instagram and someone asks a question or whatever. So I think it's really important to figure out what messaging you're good at, like how you're delivering your messaging, and then what platforms you like posting on, and just test it, feel it out. Are you getting anybody clicking, liking, doing anything? Newsletters, we love those because we thought that was the way to go, and it does work, but it's better for our existing investors than it is someone came in a funnel and now we're sending out content to them because they never get it and they're not really looking for it, right? So now we're figuring out we need to be pounding it on social media, referrals, phone calls, text messages, things of that sort. And that's where we're seeing better results than our traditional newsletters. Although they'll tell you, you've got to have a newsletter base. It's gold. It's yes, but only if people are actually engaging and taking action, because that's the end result is action, not, okay, I got someone clicking or I've got 5 million subscribers. Well, so what? If they're not doing anything, what does it matter? Right? You can't sell it to anybody.
Got it.
So,
let me ask you something here. This is going to help Ava. So you have an investor who's came into, has connected with you. They've pursued you to invest with you. They've seen your content, contacted you, and they've gone through the onboarding journey. They got on a call with you. They say, hey, I'm looking forward to invest with you. You don't have a live deal right now. I'll invest with you in the future. Now you have a deal you're working on. This is a few months later. You call that investor back, but they're busy. They're like, hey, I'll call you back, or you can't reach them. How many times do you call them until you get in touch with them?
Good question.
Yeah, so that's a great question. There's a few things. It's funny we're doing that today, right? We've got multiple points of contact. In other words, they come in somehow, right? They come in somehow, and we are emailing them for, let's say, a week, every couple of days. Hey guys, you notice you came in, you're interested, blah blah blah. The question we'll get oftentimes is, well, when does it end? When does the fund close, or when does the deal end? And the question I have for them is, well, are you actually looking to invest, or are you just shopping? Like, are you just thinking about it? Because why is someone asking you when it ends or when it closes? They're either asking because they still want to think about it, or they have a constraint, right? They have to transfer their IRA money, or they have to wait till the house sells or whatever. So I try to get to the point with people. Hey, listen, this is a great opportunity and we really want to get you in. You've committed, but we need you in. So can you give me a time frame today of when you will actually be in, signing your docs and wiring, or we can go ahead and remove you, right, and make room for someone else to come in, because
Chris,
that's the reality.
Message. That's the message. But how many times are you willing to call them if they're busy or they say, I'll call you back? Like, how many times are you willing to do that before?
Let's say somebody signed up and now they signed up that they want to invest. And you reach out to them, they didn't answer. You text messaged them, they didn't answer. I think you emailed them, they didn't answer. How many times do you reach out to them? Because people do have busy lives.
And you're busy as well as a general partner. You don't have time calling somebody 30 times. So what
100%. And we have a team, obviously, right? I call people, they all call people. We have a big team because we have a lot of leads coming in. But here's the answer. The answer is there's no fixed number. It's a feeling. Is it $1 million investor? Is it a person who already told you they had constraints, so you're giving them a little more room? Are you keeping notes on Google Docs live so that the whole team can see where everybody's at and where the notes are? Where are they along this process, right? And if you get to a point where maybe you've reached out to them, let's say 3 or 4 times, you may just red list them and leave them. Let me give you one quick example of why I'm saying, and I'm not really answering direct because there is no direct answer. I want to give you one quick example. We had one investor come in, a very significant amount of money off of social media. Okay, very significant. After months of communicating back and forth, I was the lead contact with that person. Okay, I had spoken with them personally. They committed to a very significant amount of money. They were busy. They had this going on, the bank, all these things, right? I got to a point after about 2 months. I'm like, they're just not going to invest. So I told my team, I'm shelving them. But if you guys want to try at some point, let me know. They're clearly not communicating. One of my team members reached out via text message, right? And just happened to get him on the phone, and they resonated together. And that person invested like the next day, wired the funds, right? So I had communicated at least 5 times with this person, text, voicemail, email, we were on the phone 3 different times. Had I just given up forever and my team just given up forever, I don't want to say the number, it was significant, right? And it was a matter of, I own so many businesses, I'm just crazy and I'm busy but guys, I want in. Yeah, absolutely. And I'm like, well, why didn't he respond to other like 3, 4, 5, like, so you cannot give up.
You hit him at
right?
the right time on the right day. And
Right. You need a system though to help you refine that process. So it could be 3 times, 5 times, 10 times. I don't give up. I just put them on the shelf. And maybe right before you close is your last ditch effort. Like, hey, we're closing the fund in a week, or we're almost there. Are you in or are you out? And if they don't respond, they're obviously out, but you never know, right? Don't give up. These are all valuable investors, valuable partners, right?
Awesome, Chris. Now, Chris, next question I just want to discuss. You always talk about the circle of influence. So can you talk to us, what is the circle of influence and how to use this concept in your daily life?
Yeah, circle of influence is, when I was growing up, I didn't have a very positive circle of influence. I didn't have people around me that encouraged me as much to go out and achieve my dreams, or whatever you want to call it, right? So I found when I met my mentor at 18 years old, he was that sort of positive influence. He was that circle of influence that was good, that was going to elevate me.
How did you connect with this fellow at 18? I wish I had a mentor at 18. I never had a mentor until I was 30 years old. But how did you even connect with him? Church or
well, the funny story is, I was working at a hot dog cart, and this guy came to me and he said, I want to hire you. And I'm like, what? Why on earth would you want to hire me? And he said, your attitude, your energy, your enthusiasm, you deal with pressure. I got to have you. And it just shocked me. So he actually offered me a great job I couldn't pass up. I went to work for him, and he took me under his wing, and he allowed me to succeed and fail, and gave me room and gave me books. And from there, he built my confidence, and it just showed me anything is possible if you just put the time and energy in, right? And that's where it all started, was with him. So that's the circle of influence.
Yeah, please. Yeah, focus back. Sorry,
so that's the circle. That's the circle of influence. That was one person. Then he pushed me into a sales career, and I started looking at all the successful people around me, and I eliminated communication with the people that were failing, showing up to work drunk, doing stupid things. And I looked at the people that were very successful, and I said, man, I want to be in their world. I want to be in their circle of influence, if you will. And I learned this out of a book. And so I started paying attention. I started trying to hang out with them. I started asking them a lot of questions, because successful people want to share their success. They want to tell you, they want to brag, they want to whatever. And then I started taking notes, and I said, oh, I can be like him. I can do what they do. I can show up early. And then from there, I started building and building and building. And then in my life, I eliminated people that were negative. I tell people, if you're negative, I don't want to hear it. Like, I don't need that in my life. Like, there's plenty of negative.
So 1 second. Let's create a separation between circle of influence and the inner circle. Are you talking about an inner circle, a circle where you hold? Because circle of influence means that, doesn't it mean the people you have influence over or things you have influence over? If something is on the outside of your circle of influence, you can't really have any influence over it. Like if something is happening in the Ukraine today, you have no influence over decisions of Vladimir Putin. So, but that's not your circle of influence. But let's say to your family or your business partner, that was my understanding of circle of influence rather than your inner circle. Maybe you can.
Well, it's subjective. So, for example, I never had an inner circle. I was on my own always, right? It was me. I had to figure it out. So I looked at the circle of influence in both ways. Who are the people out around me that are influencing me in a positive way? And who are the people outside me that I can perhaps influence? They weren't always the same people, but I realized that these people were going to create an interdependence in all of us that was going to work well for both of us in some way, shape, or form. Let me give you an example. When I started climbing the corporate ladder, right, I found that the more I helped everyone around me, the more opportunities came my way, right? So we were both influencing each other. They could present opportunities to me. I could help them and make their lives easier. And so when I say circle of influence, that's what I mean by it. Yes, in essence, probably by definition, a circle of influence is the people around me that I influence, right? But for me, it went both ways.
Got it. Well explained.
Chris.
All right, great. No, we want to get into kind of we wish we could get into your projects you're currently doing, development projects. We'd love to have you back on the show to kind of get into that, because the show has been so valuable. Let's kind of keep going here. At some point, we'll get you back and talk about all the great deals you're currently doing. But let's talk about, before getting into the next segment of our show, let's talk about the current market we're in. We're a very interesting part of the market. Interest rates are at 7%. Private is 9 to 10%. Are you investing in this market? Are you sitting on the sideline? Obviously, the Fed keeps increasing interest rates to defeat inflation. We finally see the job market being affected. So the word is behind the veil is that they're going to be stopping increasing interest rates or reducing the numbers and not be as bullish and start being a bit dovish. What is your view? How do you think multifamily value add or development will be affected in the next little while here? The markets are already coming alive last few days just on this report that the next Fed's funds rate raise might not be as significant. It might be something much less. Where are you at? Is your group currently investing? Where do you think the market is going to go? And in my opinion, and many other experts, we're currently in the recession phase of the real estate cycle. The next phase is going to be a recovery. When do you think recession will end? When do you think we'll enter recovery? How are you bringing all of these things into your investment firm, especially since you're dealing with investors? And the last thing we want is losing investors' money, because that stays with us for the rest of our careers as syndicators. Talk to us about the market, your predictions, when is recession going to end, all this good stuff.
That's great. So the first answer to your question in a nutshell is we're bullish. We're aggressively pursuing properties all the time, every day. The reason for that, though, is we use basic fundamentals and history and data to guide us. We don't use emotion. We don't use the news. And we have found that every time that we have done that, even in my history of single families, through multiple recessions, that it's worked well, and that we have exceeded our promises to our investors, right? So we haven't missed the mark. And if we were listening to everyone when COVID hit, we wouldn't have bought 9 properties during COVID, right? Some of which those properties, doubled or tripled some
Chris,
of our projections.
Are these co-syndications, 9 properties? A lot of times people will hear this again. Yep. Their brains will blow up if they hear you saying that you just got into this space, but 9 deals and 100 doors. Yeah. They're gonna be like, hey, these guys, this is unattainable. I can't do this. Chris is a superstar. Chris is a rock star. Is this done through the co-syndication model? Is other GPs involved in these deals?
So we have not jumped on deals for a small percentage to just get door counts. A lot of people do that. That's okay. These are deals that we either had full control over or at least half the ownership of. These are large deals that we were co-sponsors, or we ran the entire deal, right? We didn't just jump in and kind of put our name on the paper, right? We managed them. And that was not easy to do. There was a time there where we bought 6 properties in like 7 months. It was crazy. Right. But we did it. And I think during that time frame, we raised like $18 million. It was nuts. Never could have thought we would have ever been able to do that, but we did it. So to answer your question is, yes, it takes partnerships, it takes groups, it takes work ethic, but we follow our fundamentals. We don't let people take us off of what we know. We don't let things jar us, because if you get caught up in all that, you're gonna fall off the rails, right? And so right now, we're aggressively pursuing our development projects because we feel the way the economy is going, we are in a very good position when the interest rates drop, which they will drop sooner than later, and the economy starts roaring again after this Fed-induced recession we're going to have, which, by the way, we've done 9 times in recent history, and every time the economy has boomed back and interest rates have plummeted, right? So, looking at history, and this is actually more mild than the last 9 that we've had, things are going to be just fine.
So
The key is how.
go ahead. Go give me the key.
Yeah.
Give me the key, and I'll ask
The
you a
key
question.
is how do you time it if you can, right? So
Let's talk about
right
that
now,
timing. Let's talk about the timing.
yeah,
You talk about,
yeah.
so a lot of times people are familiar with multifamily value add business model where you buy a building, you buy a community, you go in, you do some form of upgrade, you increase rents, you increase the asset value through the value add business plan. Great. But currently, because of the high interest rates, the yields might not be there. So might not be cash flowing or what have you, or you might be going in at a very high interest rate for your bridge debt. So are you saying that your development business model currently is in a way where you're constructing and developing the project while we're in the recession phase of the real estate cycle, hoping that by the time your projects are built, and the business plan is to build them and rent them, or build them and sell them? So they're condos or apartments?
Build, rent, and sell, right? At
Build,
some
rent, and
point,
sell.
there's
Stabilize and sell. So now is that what you're alluding to? That is this idea of going through this current downturn by being under construction. So then by the time your projects are built and rented, you'll be in a different type of market.
Yep. The short answer is this. So let's talk value add quickly and new construction. Okay. But in general, as a blanket statement, if you looked back 3-5 years ago, even 2 years ago, and you stayed in this frame of reference, right, which was the here and now, things would be dramatically different a year or 2 later, or a year or 2 before, right? Look at what we've done. We had this crazy upswing, then COVID, then no one's paying rent. Wait a minute, people actually did pay rent. It wasn't that big a deal, et cetera, right? Right now, if you stay in this frame of reference, I'm shopping value add. If I'm a value add shopper today, and I'm looking at 7% interest rates, I'm simply shifting my model slightly. I'm saying to my investors, listen, because of the interest rates today, we're going to extend our cash flow. We're not going to be able to give you cash flow for 2 or 3 or 4 years. But as soon as we refi, when interest rates come back down, we're going to get back into a stronger position. But I can tell you the fundamentals are there, because rent is going to go up, because rents don't follow recessions. Everyone talks about how rents are dropping or they're going to drop. That's BS. If you look at the last 30 years, that doesn't happen. There's little blips in rent, but they always go up. And the average rent increase over the last 30 years is like 8% plus, right? And if you look at inflation, it's much lower than that. You look at interest rates, 30-year average, 7.5%. So I tell people, don't focus so linearly. Don't look a little broader, right? Think about the future. And if you're buying value add, yeah, you've got to be a little bit more creative with your offerings, right? Understand that you're going to probably have to refi. You might do some interest only, short-term debt, bank debt, Fannie, Freddie, whatever it is. New construction is totally different. I'll explain that briefly, but it's not that you can't find deals. It's just the sellers still want prime value. They still want prime money for their properties, and interest rates are climbing. So it's making it harder to give the returns. So you may not find as many deals as you had, and you may have to sit on the sidelines for a little while. But if I was buying value add today, I wouldn't be sitting on the sidelines, because there are still opportunities. So let's shelf that for just a second. New development. The reason we love new development is because we are building properties with rates we're getting quotes on right now between 6 and 7%. Let's say the building cost us $50 million to build today, okay? By the time we build it in 3 years and we start to occupy it, get it stable, based on historic trends, the interest rates will start dropping. If they don't drop way before that, they're going to start dropping, right? Supply and demand tells us that we don't have enough multifamily to house people until 2035. We are way out to have enough properties for people to live in, right? So we know the demand's going to be there. And when you're building in Denver, Colorado, Phoenix, Arizona, markets that we're going into, there's no shortage of people moving into those markets and making great money, right? Regardless of recessions and all that, they're short-lived. Recessions last 18
What
to
are
24
you building?
months.
What are you building exactly?
Class A luxury, infinity pools, Zen gardens, the whole shebang. Dog washing stations,
units?
electric bikes, 200 plus on every property except for one. And some of them are like within a few blocks of like stadiums and downtown and all that. They're in great markets,
We're talking
right?
about well over $50 million. Are you guys
Oh yeah,
syndicating these deals?
yeah. The portfolio, we have 2 separate funds, right? The portfolio will be worth about 750 million in our estimate. So one investment, 6 properties. about 650 million
So
or 750 million.
you've created a fund for your mandate is developing these projects, and you're raising capital for them currently. And have you started on any of these development projects?
We break ground in January on the first property, but we own 5 of the 6 parcels that we're building on already. And anyone can invest in our funds, right? So it's accredited, non-accredited, all that 506 CF, we have a huge
Sure.
platform. But I wanted to real quick touch on the construction thing, just so, because I don't want to leave your listeners. Here's the thing. The reason we love it is because construction costs are going down, okay, from our modeling. We just negotiated $700,000 off one of our properties, right? Just the land, right? So all the modeling is actually looking even better as we're moving forward for us. By the time we start occupying these units, rates will be stabilized. And even if they're not, we've built it into the modeling. But we know one thing's for certain. The supply and demand is not changing, right? We know it's not changing for a long time, right? So, I don't want to get into all the details because it'd be too long, right? But the bottom line is we've modeled this. The fundamentals are there. So we are in development. Now, we've done one development project before. We started 3 years ago that's just finishing. It's about an $80 million project. And we are 17% now above our pro forma rents we projected as of today, right? And we're just getting our occupancy going, right? So again, 3 years ago, if someone had said new development, you might went, no new development, it's not going to work. But now you look and go, well, gosh, thank goodness we did that, right? So again, I know that's a lot of information, but I just want to give you a high level. You can make any of this stuff work, but you have to look at the marathon and the broader picture and not get so caught up in what's going on right now. Just shift and adjust, stick to your fundamentals, put the work in, and surround yourself with good team members that can maybe help you extrapolate, pull out the right data to help you make the right decisions, right? There's no one way to do it.
Got it. Last question before we move to the next section. So Sterling, Rhino Capital, you guys syndicate deals. You also have funds. You buy value add. You also do ground up development. When someone connects with you, how do you assess what's the best investment for them within your portfolio, within all the different strategies you have? How does that work?
Yeah, there's different processes. One of them is required to be public offering filed with the SEC. So there's a process. They have to go through a certain platform, right? And we have to keep all the communication public on that platform via back and forth messaging and such. It's all regulated by the SEC. The 506C obviously is accreditation. So you don't even have to really be on a phone call with them. But in years past, we would require a phone call, right? Just to qualify them. Some of the basic fundamentals are, we don't want you to have high credit card debt. We don't want you to invest the last of your money. Do you understand the basics of investing and how risky it is, et cetera? So we do make sure it's the right fit. And we tell people openly, if you need, like, let's say, for example, cash flow today, or you want a certain return, we'll refer them to other syndicators, right? Because we'll say, you may not be a good fit for us, but this is a small world and maybe you might want to go look these guys up, that kind of thing, right?
Got it. Got it. Okay, awesome, I want to ask him so many questions, but we'll let the man go for today. We'll let him go for today. All right, man. Really appreciate that. Thank you for all the knowledge you bestowed upon us and our audience. So let's get to the next segment of our show.
All right, Chris, we're going to do the 10 championship rounds to financial freedom. I'm going to start asking you some questions, whatever comes top of mind.
Ava, me and Chris are so energetic. You're literally going to seem like you're in a Chinese opium shack and totally drowsy. If you want to catch up and keep up, you need to wake up and speak loud and energetic. Me and Chris have been yelling and screaming for an hour. Whoever was listening to this show for the last hour, on the podcast or YouTube is like, okay, Ava, you sound very... come on, girl. You got this.
Ava's our rock. She's our foundation.
Yeah, I'm listening. I'm writing notes. I'm doing all that fun stuff. All right, let's get started, Chris. Who is the most influential person in your life?
There's no doubt about it. It was that first mentor. His name was Ron Norgan, entrepreneur, great family man, and he's like a father to me for sure.
Right on. Okay, what is the number one book you recommend?
There's many, but it had nothing to do with real estate. But it was How to Win Friends and Influence People early on. That was the first book that mentor gave me. How to Win Friends and Influence People. Dale Carnegie.
That's really cool. I've been meaning to read that. Okay, if you had the opportunity to travel back in time, what advice would you give your younger self?
I would say hot dog stand sooner, man. Don't stay at this hot dog stand for too long.
There is no doubt about it. It's so funny. Everyone loves that story. What I would say is slow down. Don't take everything so personal, and don't be afraid to fail. I was very critical of myself very early on. I had a lot of pressure I put on myself, and I realized as I got older that it wasn't as necessary, although it helped make me who I am. I would say don't take it so seriously and take time to absorb and enjoy the relationships around you a little bit more, because success is coming, right?
That's
It's
great.
coming.
That's right. I take
like
life
that.
way too serious. Ava tells me that all the time.
August takes life way too seriously. So that's really good advice to tell your younger self. All right, now, Chris, what's the best investment you've ever made?
There is no doubt about it. The best investment was the first multifamily syndication we did. Staggering. I've had a lot of great investments. I've actually lost very little money in my life in any business transaction. The one it was a little retail shop we
We'll
invested
get into
in.
that. You're answering the next question.
Oh, great. Sorry.
Yeah, so that's
Great.
the first multifamily
Yeah.
deal that you did. Now, my next
Yeah.
question is, what's the worst investment you've ever made, and what lessons did you learn from it?
I dabbled in retail. So I invested in some retail, and that wasn't my passion. I needed to be kind of a free bird and be creative and 30,000 foot view and all that. While I can swing the hammers, I don't want to be 7 days a week somewhere, and I don't want to be held accountable to somebody not running my business properly. I want to control that. And so I lost a little bit of money, but nothing major. Learned a valuable lesson, and I stick with real estate today.
There you go. Right on. Okay, how much would you need in the bank to retire today? What is your number?
I'm actually well over positioned to do that. I have enough cash flow and liquidity to sit on a beach the rest of my life, but it's not about, quite honestly, it's not about the money for me. I've reached that. I enjoy the journey. I really have fun talking with you guys and helping people do the same thing. That's the truth. It's all good.
Yeah.
Love it. Living off that cash flow.
Yes. If he wanted to be close to beaches, he wouldn't be living in Seattle.
Yeah.
So,
Yeah, it's cold here, man.
Yes, there you go. Okay, so next question. If you could have dinner with someone dead or alive, who would it be?
It would probably be President Lincoln from way back in the day. He overcame tremendous adversity in a time where, we had a lot of segregation and challenges with war, and he built his company and mindset through bootstrapping and just figuring it out. And I would love to actually have a private conversation with what was President Lincoln.
somewhat of a
Super
common
cool.
answer we get, actually.
Yeah.
Really?
Yeah,
Wow.
we've got that a few times before.
Yeah.
I write a lot of Lincoln letters.
Oh, that's cool. I've got Lincoln on my wall, actually.
Okay, very cool.
Are you familiar with Lincoln letters?
Yes,
Yes. Okay.
that's awesome.
All right, Chris. If you weren't doing what you're doing today, what would you be doing now?
What I'm most passionate about next to real estate is actually speaking on stages and helping young people. So I would probably be a speaker, maybe coach, mentor of some sort. I don't have mentor programs, but I imagine that would be the natural progression for me after building a long-term sales career and being in real estate, is just actually being on stages, helping people and talking and giving back. I enjoy that. That's probably what I'd be doing in some way, shape, or form.
You definitely have the energy for it.
Yeah.
Thanks.
Okay. Okay, Chris, book smarts or street smarts?
Definitely street smarts.
Street smarts. Okay. Last question. If you had $1 million cash and you had to make one investment today, what would it be?
It would be in multifamily syndications. Today it would be development, but multifamily syndications in general.
Right on. Okay.
All right, Chris, really appreciate it, man. Sharing us more knowledge and more experience and opening up your kimono for us. So maybe next thing here.
Chris, what's the best way that people can reach you, please? You can just
Simply reach out to sterlingrhinocapital.com, or you can check out our podcast, which is createyourfortunepodcast.com. And we got everything on there. So you just check us out, one of those two places.
And for people watching, this is going to be in the show notes when this gets published.
That's right.
That's about it.
Thank you so much, Chris, for being here today. We really appreciate it.
Yeah, man. Thank you so much. Hope to see you in person soon. You're close to Vancouver here, so hope to see you possibly outside of business. But yeah, man, really appreciate you coming on.
That's great. My whole team loves you guys. We appreciate all you guys share with the listeners and the real estate world. And thank you so much for having me. I'm grateful that I had the opportunity to talk to you guys today.
Absolutely.
Thank you. Thank you for joining us for this episode. We hope this conversation enlightened you on how to win big in this highly profitable and risk-averse space. Get on your feet and embrace this world that offers so many opportunities just waiting for you out there. Continue your journey to becoming a savvy real estate expert by subscribing to the show at cpicapital.ca. Don't forget to leave a positive rating and share with your friends. See you on the next one.